Ladies and gentlemen, good day, and welcome to the Container Corporation of India Limited Q1 FY 2021-22 earnings conference call, hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you, and over to you, ma'am.
Yeah, thank you. Good morning, everyone. And on behalf of DAM Capital, I would like to welcome you all to the 1Q FY22 earnings call of Container Corporation of India. We have the management today being represented by Mr. V. Kalyanarama, Chairman and Managing Director, as also his team. I'll now hand over to Mr. Rama for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Thank you, Bhumika. So, good morning to everyone. So, I'm here along with all my team, all four directors, P.K. Agarwal, Director Domestic, Sanjay Swaroop, Director International Marketing, Rahul Mittal, Director Projects, and Manoj Dubey, our Director Finance and CFO. So let me first share with you the happy news that this is the best ever Q1 our company has achieved in the history. So we can safely say that it is now the business in this Q1 is better than pre-pandemic level. We have seen growth in both EXIM and domestic volumes. There is a growth of almost 28% in EXIM volumes and a very robust growth in domestic volumes, 68% growth. That shows the demand for and consumption in India, in the domestic market. So we were always having this strong belief that domestic market is poised for a good growth. And we always getting ready for that. We bought a lot of containers in the last 3 years. We added almost 24,000 containers in the last 3 years. So that really helped us in picking up all these volumes. Today, our company is having around 37,000 containers. And we are, in fact, now trying to develop the container manufacturing within India so that we'll become self-reliant in India itself, even in different political situations. We need not depend on imports from China. That work is in progress. And this demand in domestic is good for the company because as we have seen traditionally, the total income ratio is 80% from EXIM and 20% from domestic, but that is now changing. Domestic is picking up. And we expect this to become maybe around 70-30 by the end of this year. And we are aiming at making it 60-40 in the coming years, maybe in next 3 to 4 years. We are working on many things, many lines of business. In fact, we recently completed, we floated a tender and awarded the tender for bulk cement transport, which will start happening from the next FY Q1. That's a good volume of business. It will be almost a 500,000 ton, this one, it will be in a year 500,000 tons of bulk cement transportation. That the first bulk cement terminal with a silo is being set up at Coimbatore, and there are many possibilities for this to grow all over India. There may be, this is one sector where a good growth will come up. This is what we were talking of, transporting commodities in bulk. Wood grains we are doing, as I told you in the annual conference call, we already started doing that. We did some around 2 to 3 lakh ton movement for ITC, and we did some trials for FCI. We hope to see some more traction in this financial year itself in that. As I have given the forecast to you that we will grow 12% in our top line and 100% in bottom line. That in Q1 we could see that it is happening. In fact, our top line growth is much better in Q1. because the base was low, but the bottom line, as I mentioned to you, that 100% growth that we will touch 1,000 crores PAT, we got 250 crores in Q1. So even mentioning this on a conservative level, we are sure that we'll achieve 1,000 crores PAT. But as all of us know that Q3, Q4 normally are the better quarters in the business, so this may be bettered also. Regarding the LLF, let me tell you, and I want everyone to be more attentive to this so that we can avoid a lot of repetitive questions on this. The LLF, there is complete clarity now. As I mentioned in the annual call, the liability for this year we expected to be 450 crores. We provided 113 crores in this quarter based on that calculation. But while doing this, we completed another exercise of collecting the land rates from revenue authorities, and that has been completed. So we are reworking. Now it is giving us an estimate based on the confirmed rates from the land revenue authorities, a figure of 375 crores. Friends, so let me tell you that LLF for this year for your company will be, the liability will be 375 crores. So though that also will push up our bottom line. And regarding the taking over of the terminals on a long-term lease by paying the upfront payment, the work is in progress. So there are the news items which are coming up, and in fact in the TV interviews they asked me, I clarified that it's a wrong media news. There is no objections from any department. All the department concerned in this, DIPAM, Minister of Railways and CONCOR, are all in the same line of thinking. So the work is going on. As all of us know, the government process will take its own time, so procedure has to be followed. So the payment, one-time payment for all 24 terminals of railway land is a work in progress, and it will happen. And the estimates, as we discussed last year, the same thing. So whenever it happens, we will go for a loan, a short-term loan. So the things are looking very good, and I hope this financial year will be a good financial year for your company. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star and 1 on your phone. We have the first question from the line of Atul Tiwari from Citigroup. Please go ahead.
Yeah, so thanks a lot, and congrats on very good set of numbers. And you anyways have commented on LLF. So just one additional question. What is the one-time payment for 24 terminals based on the new LLF calculation that you have done, 375 crore?
See, the one-time payment, as we mentioned, we got cash reserves of 2,500 to 3,000 crores, and we will be going for a loan which we notified to the exchange of 3,500 to 4,000. So that is in the range of that, 6,000 to 7,000.
Okay. Thanks a lot. Thanks a lot.
Thank you. The next question is from the line of Pulkit from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. So, two questions. Sir, if I look at your realizations on the EXIM side for the last 3 quarters, there is a marked improvement. Now, on a handle basis, we are doing about 16,000 rupees. Can you highlight specific reasons that are contributing to this, and that if they are sustainable? That would be my first question.
They are sustainable, and the reasons is that a lot of loaded running improved, and the empty repositioning and empty running is coming down. And also some terminal charges what we imposed is giving us additional margins. We have not increased the freight rates, but we increased our terminal charges for the services what we are providing at our terminals. That is giving us a good rewards and increased margin.
Sure, sir. So we can expect this number. And my second question is, when I look at your margins on the domestic business also, for the last 2 to 3 quarters, there's a marked improvement there. Any comments on anything being one-off there, or again, that is something that should be expected to sustain?
So, you see, one thing, first of all, you yourself are telling for 3 quarters you are seeing marked improvement. So, if it is a one-off thing, it will be a flash in the light, one quarter it will happen. It will not happen for 3 quarters, no?
No, sir, but if you attribute a reason to it, it's always easy for us to understand it, right? Because 6 quarters back, even this was there at a time when we were booking SCI's income, etc. So, a reason would always be easier for us to understand this.
Right, that's good. That's good question. The reason I will tell you. So it's not a flash in the pan, it is a regular feature. And the reason is that here also the more and more domestic traffic we are picking up. So more loaded traffic will give us more margin. It will cut down on our empty running. Even though an absolute number, empty repositioning cost on domestic side has gone to 45 crores, but if you look at the growth what we achieved, 68%, that proportionately it is less empty running. We got more loaded running. And other thing is we introduced new containers, all new containers what we brought, maximum of them, the last 24,000 I mentioned, that maximum of that we brought high capacity containers of 34 tons, which are carrying 31 tons payload. And our rakes also we are upgrading. Earlier these rakes were having a carrying capacity of 61 tons. We are upgrading them to 68 tons, and now almost 60% of our fleet is already upgraded. So that these things are giving us good dividend. The high carrying capacity is giving us more margin.
This is useful, sir. Thank you.
Thank you. We have the next question from the line of Vishal Dhanvi from WellQuest. Please go ahead.
My question is in the front of lease only. So I wanted to understand that in FY21 that the new policy introduced that the lease will be charged on 6%. So can you tell me that what was the cost in Q4 FY21 for lease? Because if I will compare Q4 FY21 numbers with the Q1 FY22, there is a huge jump in EBITDA margin, which I think mainly due to lease cost only.
Yes, in Q4, as you may be knowing, we paid something of a backlog of empty payments also, and it was into 220 crores. So in comparison to 220 crores that we paid towards LLF in Q4, this quarter we are only paying 113 crores. So obviously it will have a good impact on the margin also. There's no doubt about it. But you look at the margin rate Q1 to Q1, which was apple to apple. And there you see there is a marked improvement in the margin for the regions that CMD mentioned.
Yeah, I got it. Basically, I just wanted to understand that in Q4 what happened, because in Q4 they were used within EBITDA, that I was knowing that there is an impact of lease only, but amount-wise I was not knowing.
Yes.
Understood. And can you give some light on divestment process also, that right now it is at what stage and what is going on over there?
It is work in progress.
And what, okay, understood.
We can't give many details. No, it's a work in progress, it will happen.
Yeah, okay.
Thank you. We have the next question from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah, hi, good morning, sir. One is bookkeeping question about originating volume. And second, sir, we have now seen good traction coming in bulk side of a business. How is the opportunity with this modified wagons for automobile or RO, basically, if you can highlight?
The bulk is not about RO and automobile. Bulk is moving the commodity without bagging it. So there is a lot of demand for cement to move in bulk. So necessary infrastructure is now, as I said, is getting created at one of the terminal and it may be replicated at other places. In addition to that, we are working on some more things to bring in bulk into containers in a different technology. So, and food grain in bulk, already we did around 3 lakhs last year and we got the technology. FCI also is happy with the trials. So that also may happen this year. We can see some more traction. That's what I mentioned.
I got you, sir. So let me rephrase. So after this bulk, my question was, would we like to diversify into automobile and Ro-Ro?
Automobile, we will not own the wagons. We are already providing our facilities for doing automobile loading and unloading. That will continue. Beyond that, we are not interested in getting into automobile because that's a low margin business as far as we are concerned, because we can't do that value added services like PDIs and all that. Regarding Ro-Ro, yes, Ro-Ro is not possible on many routes, but on the DFC, Ro-Ro, if it is possible and if we see traction, we will be definitely entering into the Ro-Ro business on DFC.
Understood. And originating volume, sir, for this quarter?
Originating volumes, what you want for the Q1?
Yes, sir.
Q1 is 0.529 million. ESO is 0.083 million. Total is 0.612 million.
Thank you, sir.
Thank you. The next question is from the line of Ajinkya Bhatt from Macquarie. Please go ahead.
Hi, sir. Thanks for the opportunity. So just one question. You mentioned about domestic manufacturing of containers. So the question is, when you procure these domestically manufactured containers, is it significantly cheaper than Chinese imports, and would there be a saving on capital expenditure from that angle, or is it predominantly to reduce import dependence but not really material financial benefit from that? If you could clarify on that.
See, there may not be the financial gains in that, because that in a container, one container costs around 2.8 lakhs. If we import we costed as something like that, and in India also we may be getting at the same level. So the main important thing is the self-reliant of India and the Atmanirbhar Bharat, what government is talking of. So in different political situations, we may face problems sometimes of importing or giving contracts to other countries. So we will be seeing a robust growth in domestic business. And also because we now introduced containers warehouse, which is picking up very fast, we will be requiring more containers. So we need containers. We want to make a self-reliant India for container manufacturing.
And how much would be the procurement, let's say, over the next 3 years or 5 years? Any plans you have on that front?
News item पढ़ते नहीं वो CONCOR को follow करने से. We said this 8,000 containers every year for next 5 years.
Okay, sir. And just final question, sir. You have now successfully forayed into transportation of bulk commodities through containers. We have seen that in food grain, now cement. Any more opportunities on the cards, say fertilizers or iron ore or anything else?
The iron ore and coal is not allowed as on date to move in containers by railways. But other commodities, we are already doing bulk transportation of what is that? Soda ash. Soda ash we are doing, industrial salt we are doing raw material for Colgate paste and tooth powders. So all these things are happening. There are many commodities. But I mentioned the major commodities where there will be good volume is the cement and food grain.
Okay. Understood, sir. Thank you. Thanks a lot and all the best.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
So just a bookkeeping question on lead distances. If you could share the EXIM and the domestic lead distances for the quarter.
Exim is 704, domestic in 77.
Okay, thank you.
Thank you. The next question is from the line of Pulkit from Goldman Sachs. Please go ahead.
Sir, thank you for giving me the opportunity again. Sir, this is on LLF. When we say that LLF will come down to 370, so is this our assessed number that is vetted by Indian Railways as well?
As of now, it is our number, but when we give the numbers, we know that the numbers based on some valid documents with a certainty. So there is no vetting process in this. Even earlier also there is no vetting. It is more of a mutual consultation happens. If there is a difference of opinion, then the decision is based on documents. So as I mentioned, we got our documents very clear. So as for that, this is the...
Sure, sir. So since I've got the opportunity, maybe I'll ask one more question. Sir, any sense on any possible tariff hike?
Bolo.
Any possible tariff hike one could look at in the near term?
We are looking for volumes and maintaining the growth path, and got very good margins now. So maybe immediately we are not looking at any freight rate hikes. This quarter we ended with 2% operating margin.
No, absolutely, sir. Thank you so much for that.
Thank you. The next question is from the line of Kondinya from GM Financial. Please go ahead.
Hi, sir. Thanks for the opportunity. So just trying to understand, when I look at the financials, there is a sharp reduction in other expenses and other operating expenses as well. So can you help me understand this better, please?
Yeah. So other expenses, there is one-time item. Last year, if you recall, we contributed a lot to PM Care Fund for this COVID thing. So last year, 25 crore booking was there that the company and the CSR gave it to PM Care Fund. So this year that is not there. So that is one of the important items which is bringing it down by nearly 20 crores.
Mm-hmm. Understood, sir. Sir, and sorry for repeating this question. There was a disturbance in the line when you answered this. Also, what is the one-time calculation total amount that you are speaking about? What is the amount exactly?
LLF?
Yes, with respect to LLF.
LLF?
Yeah.
So as CMD mentioned, it will be around 375 crores.
No, sir. I'm speaking about the one-time amount that we have to pay to acquire the lease.
One-time amount is, it will be anywhere between 6 to 7,000 crores.
Understood, sir. Thank you very much.
Thank you. The next question is from the line of Mukesh Sharoof from Spark Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. My first question is with regards to the Indian Railways permitting the 25-ton axle load now for the wagon. So just wanted to kind of check with you, how this can benefit us in terms of margins or probably market share or double stacking. What's your sense on this, sir?
See, 25 tons, when they permit, the carrying capacity on the wagon will go to around 80 tons.
Right.
So that will improve the possibilities of double stacking. So we'll be carrying more load on a same asset. Otherwise, which we are carrying at 68 tons, that will definitely improve our margins. So this is now available only on DFC route. And let me share with all of you, everybody may please listen, that DFC started functioning from yesterday night. So the train operation started, and our major terminal Kathuwas is connected to DFC yesterday night. So there we will definitely get the benefit of running 25-ton axle load wagons, and we got those wagons, we already got 12 rakes with us, 25-ton axle load, and this year we will be procuring something like 48 rakes. So by the end of this year, we will have around 48-50 rakes of 25-ton axle load with us. So this will give us more opportunity to do more double stacking and also to increase the loading In domestic also, maybe because we can club domestic EXIM containers together, bring in so many opportunities are there. Let's see.
Right. And so 48 rigs is what we are planning to procure this year, sir? Additional?
Yes, yes. Already 12 rigs we got. These are all new wagons, 25-ton axle loads.
Right, right. And secondly, sir, we were also hearing that some of the large shipping lines, they are trying to kind of push rail over road on the export direction in the last, say, 2-3 months. So have you seen, any of this benefiting our rail volumes, and how do you see this go ahead in the future?
This will go up. See, there is definitely growth in the exports. So you could see the volumes this quarter itself that we did more volumes. It's not that on the low base of last year Q1, but even otherwise also this is the best volume in any quarter. We touched almost 1 million tons throughput in this quarter. Just short up by 9,000. Otherwise we were there at 1 million TEU throughput. 9,91,000 something we did. So and with the DFC, the running time will come down. From Delhi to Mundra, the running time of 72 hours may come down to 40 hours. So that will definitely attract more and more traffic onto rail.
Okay, okay. And just lastly, bookkeeping, the interest cost in this quarter has gone up sequentially. So have we already taken that?
We are a debt-free company, so you need not read too much into this. These are our NDA's figures.
Okay, okay.
We have no debt on our balance sheet.
Sure. Just wanted to check that we have already taken that 3,000 odd crore debt on. Sure. Thanks, sir.
Thank you. The next question is from the line of Vishal Dhanvi from WellQuest. Please go ahead.
Sir, my question is on the line of this other expenses thing only. So you have mentioned that we have paid 25 crore, which is one-time thing, to the... Hello?
Yes, yes. Go ahead. Please go ahead.
Yeah, we have mentioned that to PM we have paid 25 crore related to that COVID, and there was a payment of 220 crore of lease, which is 113 crore during this quarter. So extra 100 crore is over there. So total extra payment is 125 crore. But the difference which we are seeing in other expenses is approximately 250 to 260 crore. So can you highlight some other cost also which was either one time or which will not impact now?
I think you have not perhaps attended the Q4 results. There were 74 crore provision for staff also regarding their this PRMS fund. That is post-retirement medical scheme fund. So that was also there, that gap that you were mentioning. So that provisioning was also done in the last quarter. And then again, there was a 46 crore provision for service tax dues that we may expect from the railways, which we did not pay in the earlier regime of LLF system before GST. So these two provisions of 74 crore and 46 crore were also part of Q4 provisioning.
Okay, understood. So if I will remove all these things, then adjusted EBITDA will be understood. Okay.
Yeah, thank you.
Actually, yeah, you say, moderator, please listen. I think today the number of participants may be less. I am seeing the reputation is happening. So you can check up with DAM Capital. If not many participants, we can close little early this conference call.
Sir, we have 4 questions in the queue right now.
Yeah, okay.
Deepika Mundra from JP Morgan, please go ahead.
Hi, sir, and thanks for taking my question. So firstly, with the first train of
Deepika, I'm sorry, we cannot hear you.
Hear me now?
Yeah.
First train of DFC now being operational, just want to know that what is the difference in the freight cost for the customer, if any? And secondly, what are the operational or benefits that you are likely to gain from DFC versus regular trains?
Your first question, there will be no difference in any freight rates, neither in our payment to railways or what we collect from customers. Okay, but the second thing, what we will gain is our asset utilization will increase because a faster movement will happen. The customers will be happy because their containers will reach port faster. So it is a very good competition to road, and we can assure more time, more transit assurances for the customers. So more and more customers can prefer rail. And double stack, this quarter itself, surprisingly, nobody has asked for double stack. We did the maximum number of double stack, 807. I think this is again a record. So that will be further going up. So because we got a terminal called Swaroopganj where we will bring in JNPT volumes and try to do double stack between Swaroopganj to Kathuwas, that will improve margins. So there are a lot of advantages of DFC running, which we will definitely try to maximize in our next 3 quarters.
Okay, and so just a follow up to that, given that the DFC is operational only partially, what is the kind of expected traffic benefit or traffic increase, and how will the logistics work out given that it is only partially running on the western side?
So more than this, I think if you are expected, you are very greedy. So we are expecting only the Mundra and Pipavav port to get connected, and the JNPT port connection is a little far away. Now this Mundra Pipavav port, both ports are connected up to Rewari, and Delhi also will take time to get connected. Dadri will get connected, it is again a little far away. So now Kathuwas, the terminal which is doing almost 6 lakh TEUs per annum, it will further go up in volumes. And as I mentioned, the other advantages I already told you what will happen. So these all things will be smoothly happening from Kathuwas. The ports are connected, there is good benefit of running and also volumes with this DFC operation.
Okay, sir. Thank you so much.
Thank you.
Yeah.
The next question is from the line of Eric from Newport. Please go ahead.
Thank you very much for giving me the opportunity to ask the question, sir. A follow-up really on the DFC completion. I know the Prime Minister indicated in January that the project would be finished by June 2022. I'm curious if you can confirm that that is still the completion date targeted. And the second question is about the property required to achieve that, particularly outside of the port in Mumbai. Has that property been secured and it's just a construction exercise at this point? Thank you very much.
So let me understand, Eric, you are in India or you are calling from outside?
I'm calling from California. It's beautiful here.
Okay. That's quite interesting. So Eric, the thing is that the question regarding the connectivity to JNPT, that Mumbai port.
That is correct.
Even though I will not have all the required details because that's your question can better be answered by a dedicated freight corridor corporation. But as far as I know, the things are not at the properties are not yet fully acquired, so it will take time. That's why I'm mentioning that it will be a little far away, connecting Mumbai port as well as connecting Dadri, our terminal in Delhi. These two are little far away. So the thing which happened now, Mundra and Pipavav connected to Kathuwas and which started running from yesterday night. Now this benefit of Mundra Pipavav port we will start reaping now. What is the first question? What's the other question you asked? Have I answered all your queries or is anything left out?
Yeah, well, the initial question, it sounds like you're saying that we will not have the completion of DFC by the June 2022 targeted deadline by the Prime Minister. Is that correct?
I can't comment on that because it's the Prime Minister's comment, so I don't want to comment on that, but the things looks that maybe there may be a doubt.
Okay. Thank you very much.
Yeah.
Thank you. The next question is on the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yes, sir. What was the rail freight margin in this quarter, sir?
%30.
Okay. And second question, sir, can you share what was AMT running cost for domestic and EXIM for this quarter?
EXIM is 26 crores, domestic is 46 crores.
Okay. Thank you, sir.
Thank you. The next question is from the line of Aditya Makaria from HDFC Securities. Please go ahead.
Yes, sir. Just a couple of clarifications. So how many government terminals do we have currently? I mean, the ICDs which are on government land?
We got 24.
Okay. So, you, when you say the LLF is now revised to 370 crores, are we going to plan to give up any more?
No. We are not giving up anything. For all the terminals what we are having now, the LLF this year the liability will be 370.
Okay, this includes the TKD as well, right?
Oh yeah.
Okay. Okay, so great. So the second question is, you mentioned about the Mundra connectivity to Kathuwas. But so what we understand is right now only the diesel locos will be running because the electric, wires are not yet ready. So, will you be able to carry 25 tons axle right now? Will you be able to run, or it will still be 23 tons?
Yeah, we got very good diesel locos on Indian Railways. So there is no problem of running these 25-ton axle load. See, 25-ton axle load wagon is only 100 tons per wagon, and 45 wagons is a 4,500 tons trailing load. So there are diesel locomotives which can carry even 9,000 tons.
Okay. Okay. And just the last question, sir, the connection from Mundra, I think the Surendra Nagar line and the Pipavav line, those are also ready to take the higher load now.
Yeah.
Okay, got it. Thank you.
Thank you. The next question is from the line of Srinidhi Kalkar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on great set of numbers. Sir, you mentioned rail freight margin for 30% this quarter. May I ask you, sir, what it was for last, because I don't think it was disclosed during last earnings call. And so question is on, sir, CapEx, sir. How much CapEx is likely for this year? And if you could, sir, give some guidance on likely CapEx over, say, next 3 to 4 years, that would be really helpful, sir.
Last quarter also it is 30% rail freight margin.
Okay. Yeah.
And capex this year we will be spending roughly around 500 crores. And coming next 3 years, it will be something like that, maybe in anywhere between 500 to 800 crores.
Great.
And this depends mainly on the divestment process.
Yeah, of course, sir. And sir, just last one, if I may. So very strong performance on EXIM side. So just want to know, it appears like this margin is despite unfavorable mix, as in higher exports container contribution, which are typically lower margin. Is that observation correct? Like good margin despite unfavorable mix?
Yeah. Obviously, if imports increase, the margins will further increase.
And sir, last one, sir, if I may. So you touched upon some increases that we took in terminal handling side. Would it be possible to quantify, sir?
No, it is not possible.
Okay, sir.
You be happy that we are getting good margins.
Yes, of course. Thank you for answering my question, sir. All the very best.
Thank you. The next question is from the line of Rakesh Vyas from HDFC Mutual Fund. Please go ahead.
Hi, sir. Good morning, and hope everyone is doing well. 3 quick questions, sir, if I may. One is, can you just highlight when is the Swarupganj terminal getting fully commissioned? And also in context to that, sir, the Kathuwas 6 lakh TEUs essentially, which it is handling, broadly indicate that we are maximizing the double stacking already. So how how much do we expect to gain further on double stacking?
As I mentioned, this double stacking, we did record number of double stack trains in this quarter, 807 double stack. So double stack, traditionally we do more on imports and little less on exports. Now we will be increasing more and more into exports also. So there is a possibility of increasing more double stack in our export side.
Sure.
And the other possibility is JNPT, we are moving directly into the hinterland. Now we will route it via Swarupganj. So that will also increase the possibility of double stack. And then 100 ton running between Swarupganj and Kathuwas will increase possibility of making more double stack. So there are three possibilities. So that will increase further double stacking.
So is Swarupganj commissioned? I just wanted to check that as well.
Swarupganj is commissioned.
Okay. So second question is, can you just also break the EXIM volume between export and import on originating side?
No, it is not possible. We don't keep that figure right for this conference.
Sure, sir. And last question, sir, just on that DFC and benefit of it. Given that the Gujarat-based ports have got the lead in terms of connectivity, in your assessment, do you think that some volume can actually shift from JNPT ports to Gujarat ports, which is more northbound, now that there is a very fast connectivity to these ports?
Sir, you ask this question to Minister of Shipping. For me, anywhere traffic is good for CONCOR.
Sure, got it. Thank you so much.
Thank you. The next question is from the line of Mukesh Sharu from Spark Capital. Please go ahead.
Sir, thank you for the opportunity. Again, just wanted to check the port-wise market shares that you provide and the rail coefficients.
Yeah, Sanjay Saab will tell you.
This is main is JNPT 33.36%.
Right.
Mundra 37.55, Pipavav 9.16, Chennai 6.78, Vizag 6.63. These are the main ports that we are having share. Otherwise, other figures are very small.
Right, right. And the rail coefficients in each of these ports, sir? In at least the JNPT and Mundra?
Only for 3 ports I am having right now. At Nhava Sheva it is 19.6%. Out of that, our share is 62%. Mundra it is 7%. Our share is 43%. Pipavav it is 64%. Our share is 54%.
Okay, great. Thanks. And just the last one is, could you provide us with the rebates and discounts?
First of all, what you understand is, if you see the figures and if you got old figures, our share has gone up very high at Pipavav and at Mundra also. Mundra we increased 800 basis points, increased to 1500 basis points in our ride share. These are the things you people should pick up as analysts, not the absolute numbers. What is your next question?
Right. Thank you for that, sir. Just on the rebates and discounts for this quarter, sir, how much did we provide?
It's very minimal. There's only 26 crores. 26 crores.
26 crores. Okay, great. Thank you, sir. Thank you for that.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah, good morning, everyone, and thanks for the opportunity. I just wanted to clarify one thing. What is the amount or one-time amount that you are expecting to pay for the terminals? I heard 2 different numbers at 3,500 crores and 6,000 to 7,000 crores. So I just want to clarify.
Sir, you are not listened properly, Aditya. I said 3,500 crores is the loan which we will take, which we notified the exchange. And the amount will be 6,000 to 7,000 crores after final figures we work out with railways.
Thank you, sir, for the clarification. That was my only question. Thank you.
Thank you. The next question is on the line of Girish from Morgan Stanley. Please go ahead.
Good morning, sir, and thanks for taking my question. Only one question. Of the CapEx number that you expect to incur, can you provide some ballpark split on rakes and terminals that you expect to add over the next 3 to 5 years in terms of value?
This year on equipment, rakes and other equipment, we expect to spend around 300 crores. And the rest of the things on IT and land and other infrastructure.
And should I expect the similar number going forward for 50 odd rakes, roughly about 300 odd crores? Or does it include other equipment as well?
You are following Girish company, so rakes actually what the forecast we have given is we are going for 270 rakes in next 5 years. So now, as I said, 48 we are procuring now. Still the number is left out is roughly around 220 rakes we will be doing in the next 4 years. So there will be capital expenditure, but as I mentioned, now there is the divestment process is on. So some other things will depend on the divestment process.
Yes, sir. Thank you so much.
But I think the thing will go on because this is the main core business.
Sure, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Ms. Bhumika Nair for her closing comments.
Yes, thank you very much, everyone, for being on the call and especially the management for answering all the queries and explaining us. Thank you very much, sir. Much appreciate your time.
Okay, thank you, Bhumika.
Thank you so much, sir.
Thank you very much. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.